When I first started day trading, started investing, I had one very, very big issue. We're going to talk about that issue and how I solved that problem, how I changed my mindset when it comes to buying and selling stocks. Breaking it all down right here in this video, so make sure you stay tuned. What's going on, guys? Patrick here, and well, today I want to talk about one of these issues, one of the biggest issues that I think a lot of new investors, a lot of new traders, something that everybody battles until you finally get to a point where you can let it click and you understand the difference and you understand what you should be looking at. Well, you're just going to keep doing the same mistake over and over. And so looking here at the SPY right now on the daily chart, let's go to smaller time frames and look at the other day. So the other day, the market crashed here. It went from 263 down to a low of 456. Now, this is the overall SPY we're looking at. If you look at the small time frame being the 15-minute chart, I feel like 15-minute chart is a small time frame when you're looking at the SPY. But if you look at the SPY here, it dropped all the way down here to 457, and it caused a lot of fear. It caused a lot of panic. A lot of people were freaking out because they were like, oh my gosh, the market's going to crash. We're all going to die, and the world is going to end. So again, remember, bigger picture, small picture. What's the big picture here? Right now, like I said, we're looking at the small picture. It's the 15-minute chart. Should I be placing my overall direction of trades based on just solely the 15-minute chart? Probably not. I should be looking at the bigger time frame. And again, that's one of the biggest issues that most people make when it comes to investing. Because if you're looking at the SPY, let's say you're trading the SPY that morning, you wake up, you see it's crashing, you're probably thinking like, man, I should either short it, I should sell my position that I maybe had from the day before, or I should maybe buy puts. At least for me, when I first started trading, that would have been my mentality. Because I would have looked at this like, oh my gosh, I'm looking at red. It's selling. It's crashing. It's time for me to buy some puts. That's what I would have been thinking. But the thing here is, if you zoom out to the bigger picture, right? Let's zoom out here. Hey, if you guys enjoy these videos, do me one big favor. Hit that subscribe button. It's over there somewhere. Hit the subscribe button. Also, check out Interactive Brokers and Trade Ideas Scanner. There's links down below for some exclusive offers. You can check them out, the broker that I use and the scanner that I use to find the hottest and latest and greatest stocks in the stock market. Let's get back into the action, baby. Now, if we look now at the daily chart, remember this candle here would have been a huge red candle to the downside at that point. We would have opened here and we would have had a big red candle. But you can see, when we look at the bigger picture, this move down does not tell me like, hey, I should be selling. This big move down, when I see the bigger picture, when I'm looking at the overall chart here, the daily chart, this big move down is telling me I should be buying, right? Because we have multiple touches of this area. We have an overall idea of a trend here as well, We've got the EMA clouds. We've got so much going on at this level that I should expect a bounce. But when I first started trading, 100%, the mistake that I would have made is that I would have believed that the market would just keep selling and break through this level and then move down to here, right? Like the market would just move on down there. That would have been my big mistake, because I would have believed that the market would simply just crash, and I should be buying puts at this level, this 459 level. But instead, you can see, obviously, we went from 459 up to a high now. I think today the high was 472.68. So what's so funny, like I'm just trying to really kind of put this into words, is as a beginner trader, one of your biggest issues is going to be doing the opposite of what you should be doing, right? If you see a big move to the downside, you're looking at it like, oh man, I should be buying these put options, or I should be shorting the stock. If a stock is crashing down and I'm only looking at the small time frame, I'm thinking to myself, I should be shorting. But instead, if you think like an actual solid, I want to say professional trader, but if you think in terms of how stocks move, how the market moves, and these overall waves, right? Like overall waves, the market moves in waves, constantly moving in waves. It goes up, it pulls back. The thing about this is, like, let's say I'm a bear and I believe the market's going to crash here in 2022. Do I really want to be taking a position down here at clear bottom, seeing that we had multiple touches of this area, seeing kind of the pattern that we've been in? Do I really want to take a short position at the bottom here? No, I obviously do not. But as a beginner, I'm telling you right now, I would have taken a short position there, not because I'm an idiot, but just because I don't understand how stocks move, or how I didn't understand how they move. Now, if I'm thinking, like, I'm still thinking the market's going to pull back here at some point, obviously in 2022, but if I'm really thinking like as a short, like a smart short, this is the way I'm going to play it. I'm going to wait for it to bounce off of this level here, showing me confirmation that there's support there at that level. So number one, I should be buying call options, or I should be buying the stock, because I believe the stock is not simply going to just wash out and drop down here. Now, obviously, news could have came out, Corona, whatever news could have came out. It could have happened. But from a technical standpoint, looking at the chart here, I was much better off buying the bottom and then trying to sell the rip higher, and then trying to short down here at the bottom and trying to get a move to this level. Really, the way I'm looking at it now as a smarter investor is if we bounce off here, we push up to this level, we push up into here. We can see we got multiple areas of resistance like this at the 480 area. So if we push up into this level and then we get denied, that's where I want to be shorting at, right? So I'm basically flipping my overall mentality, because as a new investor, I would have been buying call options up here, expecting a breakout to the upside. And then as a new investor, I would have been buying puts down here, expecting a breakdown from that move. But now, and I don't want to say, like, I hate to say that I'm like a better investor, but now the more that I've learned is that the market simply is not going to just crash, or it's not going to simply go up. Now, it kind of does that sometimes. You get these moves up, but you can see we get to a point where we hit that resistance and the market starts to kind of figure out like, hey, I need to either pull back or I'm going to keep going higher from here. So you can see today the market is at $472. I was buying $462 call options when we were down here at the 458, 459 level. And now today I'm up over 200%, 250% on those call options, because the market is pushing higher, just like I hate to say predicted, but just like I kind of had a plan here. Every trade we go into, it's not about predicting. It's about looking at the chart and seeing, like, what's the better percentage of this going higher and what's the better percentage of it going lower. Do I think that the market's going to crash through this level here and go lower? Or do I think there's a better chance that the market's going to bounce here, push up, and then find resistance and then sell off? That is a much better trade, because if we push up here, let's say we push to the let's say we push into this area here, this pullback, either we're going to break through this level and we're going to move lower, which would be nice because I'm buying, maybe I'm shorting up here at the 476. Even if we bounce off this level, this is where it all really kind of gets, tasty and gets really nice to think about, is if I'm shorting at 476 and it bounces off of this level again, I'm still in the green, right? I still made money on that move back to this support area. Now, the thing is, if I try to short it at this support area and it bounces back up, well, then I'm going to get out for a loss. Now, obviously, it can push up here, it can kind of fizzle a little bit and then break out to the upside, but my overall risk to reward is so much better when I'm on the right side of the trade. And that sounds crazy to think about, but it really is something that I think a lot of new traders, or even myself when I first started, I really struggled with this idea of being on the right side of the trade. And that simply comes from just looking at the bigger picture. Do I want to be shorting at this level, or do I want to be buying at this level? Do I want to be shorting up here at the top, or do I want to be buying at the top? Obviously, seeing that we got stuck at that level multiple times, this would have been a clear short opportunity, especially seeing that we broke below the low of this candle here, and then we moved all the way down to this 457. And that's exactly what I did at the end of 2021 when I bought put options expecting a move down here. And now I'm buying call options expecting a move back up into here. And then I can kind of watch the market. If we have a red day, if we get stuck at this level, I can kind of switch my bias, or I can switch my overall trade plan thinking the market's going to move back. And like I said, even if it moves back to this support level here, even if it moves back to 462 or 464, I'm still going to be profitable on that trade because I'm timing the overall market. And obviously, we can't always be right or wrong with our timing, and timing is always going to be difficult. You're not always going to buy the bottom, you're not always going to sell the top. But the overall direction, the overall idea of which way the market is moving, that's something that I can really focus on and learn from. And I think that's just a solid lesson for any new trader out there. When you're doing trades, when you're getting into a trade, you should ask yourself, what is going on at this level for me to either buy or for me to sell? If I buy down here and we push up to this level, we get stuck, well, maybe that's a indicator or a reason for me to start selling at that level. If we start to push through, well, then I can hold, and vice versa. Really, I need to be looking at the certain levels that we're at. If we're at a bottom, obviously I should not be selling, right? Obviously, and I don't, know 100% that this is going to be a bottom, but I can see that we've bounced, we've got stuff going on in the news, we've got the EMAs, we got support there. So I should be able to look at this like, hey, there's a much better percentage chance that this stock is going to move higher from here and then move lower, and that's where we place our trade. That's how we make our trade. And that's why I bought $462 call options, thinking that we were going to push back up here to the 465 and then up there to 470. Today, we're at 472. So that trade worked out beautifully. And that's my little bit of advice for new traders today. So if you haven't already, do me one big favor, hit that like button, hit the subscribe button. I will talk to you guys later on.